Okay, the United Kingdom is preparing for one of the biggest transformation in its financial system in decades. Experts believe that accelerating the country's shift towards digital finance could generate an additional 33 billion for the UK economy. So the government and the financial industry has launched a new task force focuses on modernizing financial market using blockchain technology, digital asset, and a tokenized financial instrument. But what exactly does that mean? Why are government considering issuing bonds on blockchain? And how could this reshape the global financial market system? Let's break it down. So first, what is happening? The UK has established a new digital finance initiative aimed at accelerating innovation across financial markets. Rather than relying solely on traditional peer-based or centralized financial infrastructure, the goal is to move towards digital system powered by blockchain technology. The initiatives bring together policymakers, financial institutions, regulators, and technological companies to identify area where digital finance can improve efficiency, transparency, and economical growth. One of the most ambitious proposals is issuing UK government bond, but also known as sovereign bond using blockchain technology. Next, what are sovereign bonds on blockchain technology? A sovereign bond is simply money borrowed by the government for investors. Traditionally, these bonds are issued and managed through centralized financial institutions and a settlement system. With blockchain technologies, these bonds can become digital assets stored on a distributed ledger. This offers several advantages. First one is fastest settlement time. Second one, lower transaction cost. Third one, greater transparency, which everyone will expect from the banking system. Fourth one, improved security. It enhances end-to-end encrypted and it cannot be decrypted by the third party. It reduces paperwork and finally real-time ownership verification. Instead of waiting several days for transaction to settle, blockchain can potentially complete settlement within minutes. Next one is why is this such a big deal? The UK is one of the world's largest financial center. Maintaining that position record continuous innovation. So digital finance can modernize capital markets by making transactions. So how? By do the transaction fast? It has to be more secured. The process should be transparent and most importantly, it should be efficient. It also make financial market more attractive for international investors. If successfully implemented, digital infrastructure could significantly improve productivity across banking, insurance, asset management, and financial services. Where does the 33 billion euro come from? So experts estimated the widespread adoption of digital finance technology could contribute around 33 billion to the UK economy. This economy boost could come from lower operational cost, increase efficiency, faster financial settlements, growth in financial fintech companies, more foreign investment, expansion of digital asset market, and higher productivity across financial services. In other words, digital finance is not just a technology, it is a potential to become a major driver of economical growth. Now, what is tokenization? One of the biggest trends behind digital finance is tokenization. Tokenization means converting ownership of real-world asset into digital token on the blockchain. These assets could include government bonds, stock, real estate, commodities, investment fund, private equity. Digital token can make investing easier by enabling faster trading, greater liquidity, and even fractional ownership. This open financial market to a wider range of investors. Okay, benefit for the investors. If the digital finance expands successfully, investor could benefit from faster execution of trade, lower transaction fee, improved transparency. better liquidity, enhanced security, and easier access to investment opportunities. Institutional investor could also enjoy more efficient settlement system and reduce counterparty risk. At the same time, we have to consider the challenges. So, despite the opportunities, several challenges remain. These include developing clear regulation, ensuring cyber security, protecting investors' data, preventing financial crimes, integrated blockchain with existing banking infrastructure, and most importantly, building trust among financial institutions. Government and regulators will need to strike a balance between innovation and financial stability. Global competition. The UK is not alone. Countries including Singapore, Switzerland, the Europe Union, Hong Kong, and the United States are also exploring tokenizing asset, central bank digital currencies, and blockchain based financial infrastructure. The race to become the global leader in digital finances accelerate. The countries that modernizing first could attract more investment, fintech innovation, and higher value financial business. So the year coming will determine whether digital finance become the next major revolution in the banking and investment. So that we have to wait and watch.